Hello, this is Jordan, and this is your precious metals video market update. Today is Tuesday, April 21st, 2015. And starting off, this is a daily chart of gold and silver, a daily candle chart. It doesn't include today's action because it takes a couple hours for stock charts to update that. But looking at gold, closed at about 1196 yesterday. It's trading around 1202 today. Silver 1594, trading at 1596 last I checked. Now, first let's actually start with silver, which is on the bottom. Silver has been leading the bear market, and silver, interestingly, was stronger than gold recently, but in the last week or two, silver has gotten a lot weaker. We can see it's breaking down. It's broken down well below 1650. Doesn't look like it has much of a chance to reclaim that. Looks more likely to test very important support just above 15. So silver here is threatening to make a new low for the bear market. Well, it's not threatening quite yet in the next couple days, but it's something that could happen in the next couple weeks, or if silver bounces a couple weeks after that. I don't think it would be a bad thing because, as I've been saying, the bear market is so long, so steep as far as the price decline, that if we get that final breakdown, that's going to be the final capitulation. So the sooner that comes, the better for precious metals bulls. And if we see silver breaking down, that should be a sign that gold is probably going to follow. So silver breaking down to a new low, that wouldn't really bother me. Now back to gold, we can see gold hasn't really broken down yet. It's in this little consolidation. Again, it's rallying today. It's at 1202, but you can see the red resistance line there. Gold really needs to close above that, which is around 1213, 1215. And this is a daily chart. If you're looking at the weekly chart, gold really needs to close above 1220 on a weekly basis to look more bullish. So gold ultimately, if it can't get above 1215 and then 1220, then it's going to be more likely to move lower, test 1180. And so 1180 is really the one support here that is keeping this from going down and testing 1140 or 1150. And we're not showing the COTs on these charts. I mean, that's a different chart. I don't have this in this update. But the thing to note is if you look at the net position in the COT as a percentage of open interest, which I track, the lows in gold over the last 2 years came at 6%, 6%, and 10%. Again, that's the speculative position as a percent of open interest. That position is 26% as of last Tuesday, and same with silver. I think silver's position is 28% when silver got down as low as 3 or 4%. So there's still speculators in these markets. I know that sentiment is obviously extremely negative, but if you look at the futures traders, there's still too many speculators in these markets, and that's why if these metals break lower, there's a lot of speculators left that could sell, and the lower it goes, they have to sell, and that's what could really push these down to new lows. That's why that's still a viable option. Now let's get to the stocks. This is a weekly candle chart. We have GDX above, GDXJ below, and it's interesting because the stocks may be starting to diverge a little bit from the metals, although it's definitely too soon to say. Just looking at the miners by themselves, I mean, I like the price action given the fact that there was a weekly low end of October, early November, then that got tested again in December, January, excuse me, then tested again in March. So the low that happened almost 6 months ago, I mean, it's been retested several times. You go back to 2013, and there were some really good rallies, but those lows were never really retested. I mean, you did have in summer 2014 what looked to be an inverse head and shoulders pattern. That completely failed. But nevertheless, the way the miners have tested their lows several times in the last 6 months, that never happened before. So that's another positive. In my opinion, it would be really positive if we could see the miners rally up to their 80-week moving average on a daily chart. That's the 400-day moving average. Pull up a chart of the Huey or GDX or any other index, and you can see that 80-week moving average has done a perfect job of really providing support and resistance over the past 5 years. As soon as the miners broke below that, the only time they rallied back to it was in that summer rally in 2012. And so the summer rally in 2014, the miners rallied back to that resistance. That was the first time in 2 years. Then they plunged, then they tested again in January. So if the miners can rally up to that moving average, which has been resistance, and test it again, that would be the third test in the last 11 months or so. And that would just be a sign of strength and a real sign that this bear market is slowly, gradually transitioning to a bull market. But we have to see, I mean, the miners are up today. 20s resistance for GDX. If GDX can somehow get above 20, then it has a much better chance to go to 22 and test that moving average resistance. But at the same time, you have to be wary, because if we get a negative reversal, then you'd look at the chart and say, well, 17 or 18 could come into play. So, and the same thing with GDXJ. It's been weaker than GDX, but if you look down there, trading at about 25 right now, it has resistance 28 to 30. Again, if it could rally up to that level, sustain the little strength that it's had, that would be a good sign that I think miners have bottomed, irregardless of what happens with gold. Now, looking at GDX, it has about 18 or 17% to go to test its daily low in early November. And we look at gold, it's trading around 1200. So who knows? I mean, if we see gold break to that final low, maybe the miners will hold their lows. That's just something to keep in mind. Another thing is volatility in these markets has been declining, so that looks like it's going to continue in the days and weeks ahead. But ultimately, as we get into May and maybe June, keep an eye on volatility in precious metals, because that could pick up and that could give us, maybe that final decline, or maybe that'll give these markets some strength and give them the ability to break out later in the summer. So whichever way it plays out, I'm not sure, but just keep an eye on these markets, because I think we're going to see a great buying opportunity one way or another in the months ahead. Thank you so much for watching. You can follow my work at thedailygold.com, and I wish you all good investing and good trading in the days ahead.